Hello guys, it's Chat Blueprint here. Welcome back to my channel. When it comes to trading profitably and chart mastery, it's always best to have a set of defined rules that guides you for every trade you take. While this will help minimize your jumping in and out of the markets, it does help improve your discipline over time. Now, believe me when I tell you one of my favorite chart patterns out there has to be the double top and bottom pattern. And if you stick around till the end of this video, I will be sharing a very reliable strategy that borders around this chart pattern. Now, it's one thing to be able to identify the chart pattern. It's another to trade based off you identifying the chart pattern. Now, the double bottoms and double top patterns should look like this. While we have this being the double bottom, also called the M pattern. The double bottom also called the W pattern. As is identified by the shape of the pattern. And then we have the double bottom. We have the double top, rather, which is also called the M pattern. Right here, the double top, also called the M pattern, as is identified by the pattern formation. Now, once you are able to identify the double tops and the double bottoms pattern, being the M and the W pattern, respectively, on the charts, you tend to see this appear everywhere in the charts, and almost on every one of the different time frames, you tend to see these patterns occurring on a daily basis. And then once you're able to identify the pattern, the safest spots to get in on your trade would be right here at the break of the neckline. So we have this being the neckline. Now this is called the neckline of the double bottom pattern, also the W pattern, while we have this being the neckline of the double top pattern. So it's always safer to get in on the buys when we have a confirmed double bottom pattern. And the confirmed double bottom pattern will be when once we have a break of this resistance level right about here, confirmed candlestick close above that level, that resistance level, being the neckline of the double bottom pattern, would be the best and the safest time to get in on the buys. Obviously, the double bottom pattern is a buy reversal chart pattern, whilst the double top pattern in the M pattern is a sell reversal chart pattern. So the best time to get in on the sell trade, having fully identified a potential M pattern, would be when once we have a confirmed M pattern. The confirmed M pattern would be when we have the break of this support level right about here. A candlestick close below that support level would be a confirmed M pattern, and that's the safest time to get in on the sales, having identified the M and the W patterns. Now, guys, very quickly, I want to jump into the strategy without wasting any more time. Now, what this strategy entails, as you can see, I've put this in a list of chronological order. What we have, the first thing you need to do. So the strategy entails, firstly, you identify a potential double top or bottom pattern, preferably on the daily or the hourly time frame, on the higher time frame. And then once you must have done that, the next thing you want to do is wait for the close of the higher time frame candlestick that forms the second leg pattern. And once you have the close of the higher time frame candlestick, depending on whichever time frame you must have identified the double top or bottom pattern from. So once you have identified the double top pattern, being the first thing you need to do from the hourly time frame, you then need to wait for the close of the candlestick, the hourly candlestick close that forms the second leg of the pattern. And then the third thing here you need to do is you scale down to the 15 minutes time frame for yet another double top or double bottom formation also on the 15 minutes time frame. So the 15 minutes time frame is our execution time frame, our entry time frame. So once you must have identified from the higher time frame, the hourly or the daily time frame, a potential double top or double bottom pattern, or wait for the candlestick close that forms the second leg of the pattern, and then you scale down to the 15 minutes time frame at the close of that candlestick on the higher time frame. And then from the 15 minutes time frame, also you want to see yet another double top or bottom pattern. Right on the 15 minutes time frame. Afterwards, you enter the trade at the break of the neckline on the 15 minutes time frame. So the 15 minutes time frame is our execution time frame. So now this is what you do, guys. So number one, rule here states identify a potential. Let's assume this is our hourly time frame, a potential M pattern. So price must have tapped into this level, and then we had a sell-off from the level. And very quickly, we came back into the level a second time. And then this is the second leg. This is the second leg of our potential what? Our potential M pattern. This is a potential M pattern. This is not yet a confirmed M pattern. A confirmed M pattern would be once we have a break below this support level right about here, being the neckline of the pattern. So the rule says identify a potential M pattern, a potential double top or double bottom pattern. So on the higher time frame. So this is not yet a confirmed. We're saying that what? Because price is trading back to the previous resistance level where it sold off from before, this is looking like a potential M pattern. Identify the potential M pattern. Once you must have identified, okay, price is coming back to the previous resistance level, likely giving us the second leg of what? Of the potential M pattern. Wait for the close of the 4-hourly time frame, the higher time frame candlestick rather. So we're assuming this is we're using the 4-hourly time frame for this illustration. So you then want to wait for the close of the 4-hourly candlestick that trades back to retest this resistance level, forming the second leg of the M pattern. Now, preferably what I want to see when once price trades back to the resistance level, forming the second leg of the potential M pattern, I want to see a rejection from the level. So I want to see the current 4-hourly candlestick that's coming into the level now, closing as a rejection candlestick from the resistance level, being the second leg of our potential M pattern. When once I get to see this happen, guys, so this is when once I get to see this rejection during the second retest, which happens to be the second leg formation of the potential M pattern, I then what move to rule number 3. So rule number 2 says what? As soon as price trades back to this resistance level where we have the first leg of the M pattern bounce off from, we want to wait for the current 4-hourly candlestick to close, assuming we are looking at this from the 4-hourly time frame. Wait for the close of the current 4-hourly candlestick, and then once that happens, at the close of the 4-hourly candlestick, scale down now to the 15 minutes time frame. And then once you get to the 15 minutes time frame, you then want to look for yet a smaller M pattern right on the 15 minutes time frame. So you want to look for yet another smaller 15 minutes time frame M pattern. And then you're only going to go in for sales on the 15 minutes time frame once you have a break of the neckline of the 15 minutes time frame pattern. So a smaller 15 minutes time frame M pattern. And then once we have a break of the neckline, then you go in for your sales as soon as we have the 15 minutes candlestick bearish close below the neckline of the smaller, which is the 15 minutes time frame M pattern. Then you go in for your sales. Have your stop loss just above the eyes of the M pattern, and then you're looking to target a minimum of 1 to 2 or a 1 to 3 risk to reward, which can be increased depending on the trend of the higher time frames. Now, I wouldn't be going in details on that as I want to keep this video quite short and then very straight to the strategy. So now let's go into typical chart example of this. Now, some days back, I caught a nice move on BOM 500 index using this very strategy. Where I had the chart pattern from the 4-hourly time frame. I'd identified a double bottom, a double chart pattern from the 4-hourly time frame. So quickly taking out this. Now you can see some days ago we had a perfect double bottom pattern. As you can see right about here, we had the first leg, and then we had the second leg that formed our double pattern, our perfect double pattern. So you can see that being a double pattern, a perfect double bottom pattern, which is a buy reversal chart pattern. So how did I get in on this? Now, the first thing, like the rule states, is clearly identify a potential double bottom pattern. So from the 4-hourly time frame, which is where I had identified this from, as soon as we had the first leg of the pattern. As soon as we had the first leg, and then we had the nice pin bar candlesticks forming a base right at this level where we had the support base, and then we had a buy movement to the upside, and then we had quickly come back again to the level. Now you are seeing this being the second leg of our potential double bottom, our potential double W pattern. And like I said, when once price is coming back to form the second leg of the pattern, in this case, we have the double bottom pattern. Preferably, I want to see a rejection candlestick, which we had right about here. We had the perfect rejection from the level, from the support level, where we had our second leg. And now all I needed to do was wait for the close of this candlestick. You can see we had that close right about here, rejection, and then we had closed. So that was the second leg of my potential double bottom pattern, potential W pattern. And the rule states that what when once we have a close of the 4-hourly candlestick that forms the second leg of the W pattern, quickly scale down to the 15 minutes time frame. Now this is where, as soon as I identified the 4-hourly rejection from the support level forming the second leg of our W pattern, moving down to the 15 minutes time frame, which is my execution time frame. Now pay attention, guys. We have quite a messy chart right about here, but I'll try as much as possible to make this even clearer. So we had this being the 4-hourly time frame candlestick close, where we had the nice rejection from the level, which was the second leg of our potential M pattern. Now coming down to the 15 minutes time frame, the rule states we want to identify yet another double bottom pattern. So we had identified a 4-hourly time frame double bottom pattern, which is a buy reversal pattern. Coming down to the 15 minutes time frame, we also want to identify another double bottom pattern, yet another buy reversal chart pattern on the 15 minutes time frame, confirming the higher time frame what bias, which is a buy reversal. So as soon as we add this close, that's where we had the 4-hourly time frame candlestick close. We had this price rally to the upside, and then we had a drop. So this being more like the first leg of our 15 minutes time frame W pattern. And then we had a buy movement to the upside. And then what? We had quickly come back a second time to form the potential double bottom, being the second leg of the 15 minutes time frame M pattern. Now, guys, the rule states identify a 15 minutes time frame double bottom pattern. Now, once you identify, scale down to the 15 minutes time frame for a double bottom formation also. Here we clearly had seen what we had the first leg of the 15 minutes time frame. We had a resistance right about here. Now that becomes the neckline of. So we have this being the neckline of our 15 minutes time frame double bottom. And now the rule states that what we are only going to enter for buy because what the double bottom chart pattern is a buy reversal pattern. It's a pattern that tells us that what the buyers are likely to step into the market and then move price to the upside. So we are going to only go in for buys when once we have a break above the neckline, when once we have a break above this neckline of the double bottom of the 15 minutes time frame double bottom. You can see for every one of these times, we did not have the break of the neckline, right? So again, we can tend to see we had yet, in as much as we had a very messy chart right here in the 15 minutes time frame, we had yet another what? Double bottom pattern form on the 15 minutes time frame again, guys. You can see for yourself. And then what? We had the nice price rally breaking above this neckline of the double bottom pattern. And now it says what? Enter trade at the break of the neckline. Now this is where typically I want to go in for buys as soon as I have a candlestick break and close above the neckline of the 15 minutes time frame, the lower time frame, double bottom pattern. I have my stop loss just below. And then, like we had said, look to target a 1 to 2 risk to reward minimum, or a 1 to 3, which can be increased depending on the trend of the higher time frame, in this case, the trend of the 4-hourly time frame. So assuming we had clearly identified that the trend of the 4-hourly time frame was in a bullish trend, then we could tend to keep holding this even for longer risk to reward, as we could see very clearly in this case, where we had this move over a 1 to 4 risk to reward on this. Now, that is that. Very quickly, I want to go over a second trade example of the strategy. Using a current buy trade, I took on Jump 75 index. So I'm currently longs on Jump 75 index. And as you can see right about here, and then price is currently moving in my projected direction using the very exact same strategy, with my first level take profit being a 1 to 2 RRO. And now price is currently some few pips shy of my first level take profits, and then my overall anticipated take profit for a 1 to 4 risk to reward. Now, very quickly, breaking down the very reasons as to how I caught the current buy trade on Jump 75 index using the very exact same strategy. Now, it gets even more interesting on Jump 75 index. Owing to the fact that I had seen from the daily time frame, I'd identified the nice reversal chart pattern from the daily time frame. So we had this being the first leg of our potential double bottom pattern. And then we had this being the second leg of our potential double bottom pattern. Now, like the rule states, guys, the first thing you want to do is identify a potential double bottom pattern. In this case, a potential double bottom pattern, which I had clearly identified from the daily time frame. As you can see, we had come back to this support level where we had bounced off from previously, some days back, some 4 days ago. We had a price rally from that level, and then we traded back again a second time to the level where we had the second leg of our potential double bottom, our double pattern. And then, like I said, I always love to see during the formation of the second leg that price what close as a rejection from the level. That's what confirms the likelihood of the level holding. That's what confirms the potency of the level, the rejection from the support level, where we have the second leg of a double bottom pattern. So we have clearly identified the double bottom pattern, which I had seen from the daily time frame. Wait for the close of the higher time frame candlestick. So if you had waited for the close of the daily time frame candlestick, you'd have seen we had closed as a nice what? As a perfect rejection from the level. So we have what? The first two rows has been what? Has been passed on this very setup right about here. So we have a rejection. We have the close, the second leg of the double bottom pattern, the double pattern. Nice rejection at the formation of the second leg. And then this takes us down now to the 15 minutes time frame. But then, of course, I want to show you something on the hourly time frame. So clearly we have what? Identified our reversal chart pattern, our double bottom pattern, the double pattern from the daily time frame. We waited for the close of the daily time frame candlestick because we identified the chart pattern from the daily time frame. Like the rule states, wait for the close, always wait for the close of the higher time frame candlestick where you must have identified the potential pattern from. And then we're looking at the hourly time frame on jump 75 index. Now, this is why I said it keeps getting even more interesting. You would see that right here on the hourly time frame, we also have what? A perfect double bottom pattern also. So we had this, and then we had the next being the second leg. Now you can see it's a no-brainer, guys. You can see how this is an even more confirmation for us. So we have a daily double bottom pattern, which is a confirmed pattern identified from the daily time frame, which check marks number one rule on our list. Identify the double bottom pattern from the higher time frame, the daily time frame. Wait for the daily time frame close at the formation of the second leg, which we did. And then we noticed that yesterday's daily candlestick closed as a rejection from the support level, being the second leg formation of the double bottom pattern. And then not also did we just see that. Coming down to the 4-hourly time frame also, we can see a perfect double bottom pattern also forming on the 4-hourly time frame. This puts the probability of this trade going to the upside at even more higher chances. And then waiting for the close of the currents. So had this been the second leg, and price nicely had traded back to this 4-hourly time frame support base right about here. And as soon as we tapped into that base, you can see waiting for the current 4-hourly candlestick to close, the second leg formation of the potential double bottom pattern, double pattern. And then you notice we close nicely also as a rejection from what? From this support level. You can see what? Number one rule has been met on the daily time frame, also on the 4-hourly time frame. Number two rule also has been met, waiting for the close of the 4-hourly time frame candlestick and also the close of the current daily candlestick, which ended up closing both as a rejection candlestick on the daily time frame and then also the 4-hourly time frame. Now, as soon as I add this 4-hourly time frame candlestick closed as a rejection at the formation of the second leg of the potential what? Double bottom pattern. This takes me now to the 15 minutes time frame, where of course I add my entry confirmation for longs. So the rule says what? Scale down to the 15 minutes time frame, where we then want to identify yet another double bottom pattern, because what? We have identified a double bottom pattern on the higher time frames. Now on our execution time frame also, we want to go ahead and identify yet another double bottom pattern, which price ended up providing me As you can see, on the 15 minutes time frame, we had a perfect first leg, second leg of the 15 minutes time frame, double bottom pattern. Now you can see our rule is very much still intact. Scaling down to our execution time frame being the 15 minutes time frame, we also need what? A double bottom formation, which perfectly price that printed us right here on the 15 minutes time frame. And this is where we are only going to get in on longs when once we have the neckline of the 15 minutes time frame broken. So we have this being the neckline, and then you can see we had a perfect break of the neckline. And as soon as that has been confirmed, the break of the neckline, where we have this 15 minutes time frame candlestick close, this confirms our buying. Stop loss just below the lows of the 15 minutes time frame double bottoms. And then the take profit targets, first level for a 1 to 2, even though I had entered a little bit lower. So I waited for a little retest, a little pullback, and then, so you can see currently I have my first level take profit hit already for a nice 1 to 2 risk to reward. You can see that, guys. And then I have my overall TPs right about this point for a 1 to 3.6 risk to reward on this, which I'm very positive that price will add to this overall take profit level. But currently I have my first level take profit target smashed for a 1 to 2. And then I have the remaining positions running for a 1 to 3.6 risk to reward on this. Now you can see, guys, that is the strategy in a nutshell. That is the strategy in a nutshell. Now, this might require you going over this video a couple number of times to get a hang of the strategy, but then I'd implore you, do so and leave me your thoughts in the comment section what you think about this, guys. Thanks for staying till the end of this video. Do also hit the like and share button, and then subscribe to the channel if you haven't done so already. See you in the next video, guys.